Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we will be looking at 7 Sharia compliant stocks that are undervalued at this point in time. It's very difficult to find dividend growth companies that are basically right now down quite a lot, and I found 7 that are still undervalued that we could potentially be looking at buying, starting tomorrow morning, inshallah. So first thing is, when it comes to dividend growth companies, all of these companies, by the way, are dividend growth companies. So that means they've been growing their dividend for quite some time, a lot of them. And growing, that dividend means for us, growing income stream. So these stocks increase their dividends consistently over time. So that means for us, that money will generate more money, and then we can compound it even better in the long run. Now, these companies are very strong companies. They have a strong cash flow, solid balance sheets, competitive advantage, or some majority of them have a wide moat and so on. In terms of total return for us, like I said, it's compounded over a period of time. So the shares that, if you own 10 shares today and the company pays you quite a bit of money, and then you buy one more share, that then share basically gives you more dividend, which means basically you're compounding, basically effect takes over. A lot of these companies you can use basically against, to protect yourself against inflation, and majority of these companies will have a lower volatility, meaning basically they're not as volatile, or lower beta in comparison to the big boys. So it is really nice investing in dividend growth companies. I'm not talking about companies with a high yield right now. We're talking about dividend growth companies that have been growing their dividend for quite some time, and also have been paying that cash and growing it for a very, very long time. Now, before we get to these wonderful 7 businesses that we're going to talk about today, I would like you to press that like button first of all and subscribe to the channel. And if you can join us in the Patreon account, that would be absolutely amazing. It will cost you about £6 a month if you join us on the intelligent investor side of things, and you get access to a lot of things, including the family portfolio, the subscriber portfolio reviews, which I have been enjoying doing for the last few weeks. And of course, if you want to join the free Discord, the link is on the description. Just go join the community of growing Muslim brothers and sisters who are trying to do the best that they can to invest in the stock market halal way, inshallah, and of course supporting each other. Now let's get started with this. So the first thing we're going to do is basically quickly introduce you some of the things that we're looking for. So we're looking for how big the company is, the current price, the dividend side of things, because we talked about these companies being dividend growth companies. So we're going to focus on this yellow line here where it says 5-year growth rate. So how fast are they growing that dividend? We want to see that. How long have they been paying that dividend, or growing that dividend if you like. The dividend safety is quite important. It gives us an idea whether this company is about to cut that dividend or not. And the free cash flow, where did that dividend come from? It comes from the free cash flow, the net income the company has generated after they paid, they get their revenue, after they paid their taxes and everything else. There's leftover money, which is that net income converted to free cash flow, and that is where we get paid from. And then of course they compare any debt they have on all of these things. Next, we want to see if these companies are growing in terms of revenue and in terms of EPS, because it is important that we invest in companies that are expected to grow, rather than just companies that are not gonna, stagnated for the next whatever years. We don't want that. And then of course we want to see if these companies are undervalued. And like I said to you guys, all of these companies are undervalued at this point in time. So it'll be interesting to see how it goes. Let's get started with the first company being EOG Resources, which is an oil company or energy sector, basically in the energy sector. 64, almost a 65 billion market cap, $118 per share right now, and dividend yield of 3.5%, which is really, really good. The payout ratio only being 32%, and the 5-year growth rate of 28%, which is absolutely huge. They've increased that dividend for the last 7 years. The dividend safety is 82%. The highest any company can get is 82%, so 99%, and this being 82%, which is absolutely amazing. $5.5 billion of free cash flow right now. They are expected to grow their earnings in 2026 about 12%, revenue about 14%, which is really good, right, for oil company. This is why oil companies are very cyclical businesses. If you look at this year, they're expecting the earnings to decline. Next year in 2026, they're expecting the earnings to grow 12%, revenue about 14%, and right now as we speak, it's about 7% up, has a 7% upside from where we are, which is quite nice. Now I'm only going to use fast graph fast graph just to kind of show you the forecast moving forward. This is basically, keep an eye on these numbers here, because this is where the earnings is expected to decline this year, next year about 12%, and then 14% after, basically after that. So based on this, the normal estimate, if you buy this stock right now, okay, so this right now, if you bought it, your basically 10,000 will become $17,200, because they're expecting about 72% upside from where we are by the end of 2027 for the next couple of years. If we use the normal multiple, which is basically what this company has been trading over the last whatever years, and that will give you also 34%, so basically about $14,000 instead of that $10,000. So you basically, based on their estimate, this company looks really good. That's the first one we're looking at today, and the next one is S&P Global. If you haven't liked the if you haven't pressed that like button yet, please do so. Honestly, genuinely, and join this community. I'm trying to grow this community and help as many brothers and sisters out there, and it takes a lot of time and effort to put these videos together week in, week out, inshallah. And that's my journey. That's what I want to do, and that's what I want to share with you guys. So I would genuinely appreciate. This is one of the best companies out there with regards to dividends, with regards to growth side of things. 168 billion market cap right now, dividend yield of 0.7. I don't really care about the yield too much, because I'm not investing in company like this for the dividend only. I'm going to invest in it for the dividend growth. Okay, so look at the dividends growth, 23% over basically recently. Sorry, the payout ratio only 23%. That means they can increase this dividend anytime soon. Basically the 5-year growth rate of 10%, which is really good. Normally I'm looking for 7 and higher. That's absolutely amazing. 51 years of increasing that dividend. So they are already a dividend king. They're increasing it basically 10% on average per year, which is really good. And dividend safety of 99%. $5.5 billion again of free cash flow. EPS expected to grow 12%. Revenue about 7%. Right now as we speak is 1% upside from where we are. So it's a fairly valued stock as we speak. Okay, using normal the estimates for this company moving forward, if you bought this stock right now, you'll be losing about 26% of your money. If you use the normal multiple according to fast graph, by the way, that is, again, we will see how much that is. If I can click this, that will be about 26% upside from where we are. You'll be making about 2,600 on top of the 10,000 pounds that or dollars that you've invested. The next one is ASML. There's no doubt, we've talked about this company. It's still undervalued, one of the best companies out there. There's no other companies that can produce. I watched actually a documentary a couple of days ago on why they're the market leader when it comes to the lithography machines and everything they do. It's ridiculous. Genuinely, I don't think any company will come anywhere near this company for the next at least 2 decades, which is absolutely amazing. Right now, market cap of $275 billion. Dividends is low, basically small, sorry, but they're growing that dividend really fastly, so 22%. And the 5-year growth rate of basically 22% means basically, and of course the payout ratio of only being 20%. That means to me that this will be growing in the next whatever years. 15 years of increase in that dividend, 82% when it comes to the safety. Free cash flow is amazing. EPS is expected to grow about 7% in 2026. Again, very cyclical business, and then 5% in the following year. Now 35% upside from where we are. $960 per share is where they think the price should be. Now with using fast graph, again, if we use the normal multiple for this company, you'll be losing about 14% almost, the estimates. But if we use the normal multiples, which is the 5-year average, that for this company we will be making, let's see how much that is, so about 100%. So basically you will be doubling your money in the next 3 years. By the time we get to 2027, you will be doubling your money according to fast graph. Okay, next one that we'll be looking at, again, I've always said to you guys, give yourself a 10% of margin of safety with all of these companies just to be on the safe side. Next one is Merck. This is another company that has been undervalued for quite some time, and is one of my favorites when it comes to the pharmaceutical side of things. 3.8% when it comes to dividend yield, 40% payout ratio, 7% when it comes to the 5-year growth rate, 13 years of increase in it, 90% when it comes to that safety, $17 billion of free cash flow right now. They expected the earnings to grow about 9%, revenue about 5%, 31% upside from where we are. $111 per share is where they think the price should be. And if we check out this company used in fast graph, we will see, if we use the estimates for this company moving forward, okay, you would be making right now, if you bought this stock right now, you'll be doubling your money, basically about 96% up basically from where we are now. And if you basically use the normal multiple, which is basically more or less the same, 93%. So you will be almost doubling your money if you were to invest in this company, this company according to fast graph. But also, again, to give yourself that 10% margin of safety if that's what you want to do. Another one is UPS, company that I have not spoken about for quite some time. It's down a lot basically for the last whatever years, basically a year and a bit. 87 billion market cap. Again, it's still a huge company. Dividend yield is probably the big stuff seen in any of the companies that I own. 6.3% right now. The payout ratio is 84%, which is absolutely huge and ridiculous. But the safety is now 50%, so they can't cut this dividend anytime soon. Remember, anything above 61% we say is safe, but right now this might not be a safe one. But again, the fact that the company is still down 20% is interesting. And if I look at the UPS here using this, okay, let's have a look at UPS and where we think it is. Right now, if you bought this stock right now, you'll be making about basically 43% on top of your money. And if we use the normal multiple for the company, and also you'll be making about closer to 60%, so about $6,000 on the top of the 10,000 that you've invested initially. Now, another one that basically still undervalued, about 4%, is Applied Materials. This company is, a very cyclical business because in the semiconductor, as you can see, is 1% dividend yield, only 18% when it comes to the payout ratio, which is very nice. I've realized a lot of the companies in the technology sector, they have a very low basically payout ratios, which is quite nice. The 5-year growth rate of 13%. So 13% for the last 5 years is absolutely huge. 7 years of increase in that dividend, 86% when it comes to that safety, $5.8 billion of free cash flow. They're expecting the earnings to grow 6% and the same for revenue as well, 4% upside from where we are. So if we check AMAT using this as well to see what Fastgraph thinks about this, if we use the normal estimates, that's not the company we're after. We're after AMAT. Okay, there we go. And estimates, if we use the normal estimate for this company, you'll be losing about 6-7% right now on your money. And if we use the normal multiples, okay, for where this company has been over the last 5 years, or the average, for example, you will be making about 6%. So you'll be making about $500 to $600 basically from where we are. So again, maybe it needs to come down quite a bit to actually invest in this one. And I think I can agree that $993 per share. Now, final one that we're going to talk about today is automatic data processing. Is the only one that's still fluctuating. If the market opens and it goes down about 2%, then you are within that range. So that's why I've included in here. Again, it has 2% dividend yield, 60% payout ratio, which is not bad at all. The 5-year growth rate, 12%, 50 years of increase in it, 97% is safety, $4 billion of free cash flow. They're expecting the earnings to grow about 9%, revenue about 6%, and that basically just $305 per share is where they think the price should be. Now, if we check this APD, not ADP, not APD, I always get these two mixed up. Now, if we use the normal estimate for this one, I think it would be expensive for Fastgraph, because I've checked it recently. I think it was 30%. Basically, you're losing about 30%, or about 7,000. You would have about 7,000 of your money, whatever it is, left. And then if we use the normal multiple for this one, you will be making about 26%, so about 12,600 basically is what you would be making, what you would be ended with at the end of 2028, because their physical year is different. So that's the 7 companies I wanted to share with you guys. All of these companies, in my opinion, are undervalued, great companies. They grow their dividends really nicely, excellent free cash flow. And one thing I would be checking if I were you is in terms of revenue side of things, how cyclical the business are, understanding each business and what it does, learning what the pipeline is. For example, like companies like Merck, for example, what is holding back UPS and how the base, what does the future look like? Because we can see that 12% growth for EPS is amazing, but look at the revenue, only 1%. Why is that even the case? What is happening to the revenue? The margins are getting squeezed because of a lot of the things that the company is doing, the fact that they're moving away from Amazon basically side of things. So there's a lot going on. So you need to understand the businesses, okay, before you start investing in any of these companies. Applied Material, another one that has some sort of a legal situation going on with the US Department. I think some I don't know, with the US government. So you need to check that out as well. So yeah, just have a look at these companies if you're interested. Of course, you do your own research. You might find out a bit more about each one of the companies. And don't forget to join us at the Patreon account, where it genuinely makes a huge difference to the channel. And yeah, let's continue investing, inshallah. I hope things are going well. Let me know what you own, what you're keeping an eye on. If there's any companies that you feel like they're undervalued that we haven't spoken about this week, just include it in the comment section. I'm keeping an eye on the comment section. You know, I'm doing videos based on what people are asking. So just let me know, inshallah, in the next couple of days, if once you've seen the video, what do you want to see next? What companies do you that are on your shortlist that you would like me to go over, inshallah, so I can put a video together maybe for the whole community, inshallah. Anyway, I hope you enjoyed this content. I hope you enjoying everything that we're doing here. And if you are, please like, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.